Okay, so as mentioned to you, here it is. Here we are in the DataFest online. And again, I'd like to say thank you to DataFest for having me here today. Very, very excited to be presenting the subject of open banking. So I think it would be very important for us when we talk about open banking to be able to first explain a little bit of what is open banking. So to understand what open banking is, we need to understand, why it was created, what was the purpose, and also to understand why it was created at the time that it was created. So the purpose of open banking was really to, again, to create more competition and to be able to create more innovation and more collaboration between the banks and the financial sector with the fintechs. Now, why was that needed? Primarily, it was because after the 2008 financial crisis, the UK's government, the Financial Conduct Authority, the Competition and Market Authority, did not see enough being done to create new products and services for the UK market. It felt that the banks were still working under somewhat of a monopoly structure, and were not doing anything to really be able to help the customer. So it was then that the Open Banking Initiative was born. In 2015, conversations had started, and in 2016, the relevant working groups had begun, where in 2016, finally, the actual open banking implementation entity was created, of which I was part of, as I mentioned earlier. The purpose of the OBIE was to interpret the Competition and Market Authority's regulatory book, if you will, the regulation in itself, which was the first of its kind anywhere in the world to try to implement something called open banking. So the task for OBIE was primarily to be able to interpret, to be able to understand what it even meant, and to be able to start to then lay out the groundwork to be able to establish and implement an open banking structure. Primarily, the structures were around interpreting the regulation, as mentioned, to create data standards of which organizations would then follow a common language, and that's where I came in and established that ISO 20222 would be the pertinent standard for open banking, and I can certainly explain a bit more as to what the thought was around that. It was also around API architecture and primarily security, to see how the banks would be exchanging that information and how they would be able to participate from a technical perspective. And of course, it was all about the strategic management of being able to manage the participants. In the case of the UK, it was started with the top 9 financial institutions, and that was chosen simply because, once again, it was felt that their participation was needed. So in the case of the UK, as we've seen in other jurisdictions, and I'll explain a little bit more about what's happening globally as well with open banking. In the case of the UK, open banking was a regulated open banking, which means, and you can have 2 types of, or even 3 types of open banking, which are regulated, non-regulated, or market-driven, and a competition of, or a combination of both. In the case of the UK, it was completely regulated, which means that the financial institutions and the fintechs participating would have to follow the guidelines set forth by the Competition and Market Authority's regulation. So our job within the OBIE was to enforce the regulation and to help the financial institutions as well as the fintechs to be able to understand and incorporate and integrate these under a very, very tight timeline. We had a very, very tight roadmap of deliverables that had to be achieved, both putting tremendous pressure within the OBIE, but also pressure on the banks, which not only had to participate, but also had to fund the initiative as well. So that made it obviously very challenging and created for quite a lot of discussions in the sector, which proved to be a lesson learned. And this is something that as Open Vector, we tried to bring abroad is some of those lessons learned of things that we probably could have done better, and things that we did do very well. So I think it's important to also look at that. And why am I mentioning some of these learnings? Because we're seeing that globally, and again, I'll speak about other countries and what they're doing, but I think it's important and it's great to see other countries taking what we've done in the UK and expand it even further as we look into the open banking journey. So If we look at open banking, what are we talking about? What is it that we really care about? And we look at this, and basically we're talking about a collaboration through innovation. And to be able to have that collaboration, we have with three fundamental pillars of that collaboration, or who are those collaborating, which are the fintechs, financial sector, and of course the regulators and the government. And I think in this case that collaboration it must change from what we know it today, or at least a couple of years ago. And by changing, I mean that for the financial sector must understand that there is a great opportunity in collaborating with fintechs, and must look at tearing down the barriers of the likes of procurement processes, for example, to be able to truly take advantage of the fintech community, not only internationally, but also nationally. I have seen fantastic fintech communities across the globe with products and services, and just a creativity that we only would assume that are being done in the main capitals of fintech, like the likes of London, and that's not true. I've seen fantastic products and services being developed in places like Lagos. I've traveled quite a bit to Nigeria as part of also my role of traveling with the Lord Mayor of London during different visits to different countries around the world, and I have seen fantastic fintechs creating amazing products and services. So I think that the financial sector here also must learn from the opportunity and break those barriers to be able to access that information. And I'll talk a little bit more about the opportunity for the banks. And of course, the pillar of the regulators and the government to help steer. Now, what is that we are trying to achieve here? Why are we doing this? And there's only one purpose, the purpose of open banking. And I want to be very clear about this. The sole purpose of open banking is the consumer. Open banking is not about the banks. It's not about the regulator. It's not about the fintechs. It's all about the consumer. So when we talk about open banking, we have to always remember why we're doing this. And it basically is to be able to provide consumers with products and services that will make their lives better, and sometimes even seamlessly, meaning that, like if we look at millennials, for example, and I'll speak about that a little bit later too. If we look at millennials, today, and even some of our of just our own involvement in some products and services, we really don't see what's happening in the background. So it's very important that we make sure that we're providing even more services to consumers, as in today's era, consumers are understanding more and more the importance of data, their own data, and how can they use their data to make their lives better. And also, consumers have realized the value of their data and the ownership of their data. So I think that is a really important point that we must never forget. We get always sometimes carried away in talking about technology and regulation and how we're going to do this or we're going to do that. But at the end of the day, we have to remember that this is about the consumer and their journey. It's about how they interpret it, what makes sense to them, and how they utilize it. So I think we have to keep that in mind. So if we talk about that, and we mentioned again now the consumers, what we are trying to achieve, and I think this is something that at the beginning of open banking in the UK we didn't realize, that the real goal in today's world and the opportunity, the great opportunity of open banking, open finance, and open data, and that would be almost like a version 1, version 2, and version 3 of the open initiative, and I'll speak a little bit about that as well later on. The real opportunity here is to create social and financial inclusion. And this is so, so important. We talk a lot about social and financial inclusion, but do we really achieve it? Do we really, are we doing the right things to be able to create social and financial inclusion? So while open banking has been a fantastic opportunity and it's growing tremendously around the world, we have to always aim at social and financial inclusion. So to be able to define a little bit of both, social inclusion in my perspective is to be able to provide the services, the access to financial products to people of not only consumers that are considered banked, but also consumers that are unbanked, So those consumers that would have in the past, without open banking, have been considered of high risk, and that the banks would have no interest at all, or would consider them too risky to be able to provide them financial service products and services. So social inclusion means to find a way to be able to provide people that are excluded from the financial sector, find a way to make them inclusive of this. And I think we have identified a whole number of opportunities of products and services that would allow that for it to happen. And I think this is also, if we have to look at it from a commercial opportunity for financial institutions, it's to be able to access millions and millions of potential consumers through social inclusion. I'll refer back to Nigeria again. You know, when I was there and in my various trips, I realized, yeah, that and it's common statistics that out of the 200 million plus of the population of Nigeria, only 30% of that population is banked. So can you imagine the opportunity for fintechs and for the financial sector to tap in to the 170 million or whatever plus, or the 140 million plus inhabitants that Nigeria has, to be able to provide them products and services. So talk about one country already giving an opportunity to the financial sector. It's just incredible. From financial inclusion, I think it's also, again, about being able to bring in and give access to an opportunity to financial institutions of all sizes. It's fintechs of all sizes and financial institutions of all sizes. So it's about being able to find a way to create inclusiveness within the financial sector or within the open banking initiative by allowing that collaboration of big techs, small techs, medium techs, and also banks of all sizes, challenger banks, digital banks, etc. So it's a way to also identify means to create financial inclusion. And I think we're starting to see a lot more financial inclusion than we are of social inclusion. And I think it's primarily driven because of commercial opportunities. But I think we're missing the opportunity of seeing the social inclusion bit. So moving on. There are quite a number of challenges related to open banking, of implementing open banking. And I think that that's become very much understood, that there's lots of concerns about, well, as a bank, I have to share my data, but what about fintechs? How come they don't share all of their data? So there's a lot of different elements and challenges about implementing open banking. Also the regulator and how it's challenging for the regulator to be able to catch up with all of these advances of technology in different aspects, and open banking being one of them. So it becomes a burden for the regulators to keep up and be able to regulate quick enough to allow for initiatives like open banking. But one of them that I wanted to focus on was gaining the trust of the consumer. And I think this is one that we cannot forget. We have been telling consumers for years to not share their passwords, to not share their information. And then suddenly, we're telling them with open banking to do the opposite, to go ahead and start sharing their information, to go ahead and provide elements of consent. And we can talk about that now as well. So I think that these are important aspects that we need consumers to be able to understand, that the likes of open banking will provide them the key components to be able to solve those issues. So we look at data privacy and client consent as the first of the three things that I have here. When we talk about consent in the UK, we implemented something called GDPR. And GDPR was a mechanism tied into the initiatives of PSD2 and open banking to be able to provide consumers with an ability to provide consent at different stages, so that information could be shared in different specific stages to ensure that a client was always in control of their data and how it would be used. But it also served for third-party providers, in this case primarily fintechs, though financial institutions can also become third-party providers in a way. And within the third-party providers, it's also to be able to understand completely what is their responsibility and capacity with the data that they want to share or use from the client. So by the client providing consent for a certain amount of information, it limits the TPP and it gives them the specifics as to what they will be doing with that information. So, for example, in the world of open banking in the UK, we can differentiate between an AISP and a PISP, or an account information service provider or a payments information service provider. So two different aspects of two different profiles of a TPP. So one of them is where you're just aggregating information, you're collecting information on behalf of the client, and you're giving them a service so that they can view information in a new way or in a different way offered by the third-party provider. An example of that would be account aggregation, for example. If a third-party provider would offer a service or an API that allowed an app that allowed for a consumer to be able to view all of its accounts in a single app, to be able to see all of their stocks or insurance policies, etc., under one single application, that would be the user, the consumer, providing a third-party provider with consent for that TPP to go out and access those accounts and take a snapshot of that moment of their accounts and provide that into a single app. Now, here's where GDPR or consent plays an important role, because it means that the consumer is only allowing the third-party provider to access that information. It does not give the third-party provider access to debit or to credit or to do any kind of other movement or anything else for that consumer. Now, for the financial institution, the consent also means that when the financial institution is safeguarding the information of that consumer, the third-party provider can show that the consent was given to them, but specifically to do what. So the bank also then can verify that what is being accessed and can prove later that they acted based on the consent of the consumer and based on what was presented to them via the third-party provider. So there's definitely an accountability aspect to GDPR or consent as a whole, because we can see that where did accountability lie? Was it the consumer that provided too much access? Was it the third-party provider that took advantage of that information? Or was it the bank that also either restricted or provided more than they should have? So I think it adds a layer of accountability that we probably didn't have a way of doing before. From a data privacy perspective, what we do with consent is also, or at least open banking has regulations stipulated within the UK, is to say for how long can a third-party provider handle the information provided or accessed of that consumer? Can it even store it? There are many circumstances where the information cannot be stored and can only be accessed one time and must be released, as well as the actual API connection, where the connectivity of the consumer accessing their own account information can only last for a certain period of time, and then they must disconnect and ask once again for consent. So these are all safeguards into data privacy and client consent. As we move on to authentication and security, part of that was already mentioned, but there are quite a number of aspects of open banking that allow for a much more tighter authentication and security. And this has been a big question that I'm asked quite a lot when giving these conferences is, well, what about authentication and security? What about security? We're all concerned about data theft and all kinds of different things. We've seen this week the announcement from EasyJet that unfortunately was tapped into, and quite a lot of data was lost. User data was shared or accessed. So in the likes of open banking, there are quite a lot of structures around authentication and security through certificate processes and trust services that are there to provide, and these are international standards, proven international standards that are that work very, very well and provide security for our consumers. And in the end, with consumer protection, and this is an element that's been a big debate for quite a long time, is when we look at the consumer, should we be educating the consumer? Should we be looking at ways to train the consumer, if you will, on how open banking works and how GDPR works? Or should we be the ones that simply do it in the background for them and have their best intentions in mind when we do everything? And I think it's the latter. And why do I say that? Because it is impossible for us. There is a certain percentage of the world population that actually understands how all of this works. And I would say it's a reasonably small number if we compare it to the entire population of the world. So I think it's very important that we're the ones that ensure that all these elements are in place. So if I turned around to anyone on the street and stopped them and said, can you tell me what SWIFT is? Can you tell me what BACS, faster payments, CHAPS, FIX, open banking? Can you explain to me what these things are? That nobody would really, many people would not know what they are. What consumers are interested in is the service. They want to insure, and they just want the ability to be able to transfer money from A to B through an app, from the luxury of their home, from their car, as they're walking, whatever it is. They want to purchase a product, and they just want to do it, and they want to do it now. So I think it would be very difficult to try to educate consumers on every aspect. So if we haven't done it in the past, for the last 30 years of data transmission, as we look at, like I mentioned, SWIFT, for example, is a good example. Somebody would walk into a bank and fill out a form and provide cash or debit an account, and that was it. Money was gone, and they never knew how. So I don't think that we can continue to expect that to be able to continue educating in that level. Is just not possible with how fast innovation is moving along. So I hope this was clear and adds a bit of insight as to how open banking is protecting the consumer and why this is such an important piece. So I talked a little bit about open banking, and I think it'd be important to look at open banking in the world as we know it. So this map has changed quite a lot, and here at Open Banking we've been keeping a very close eye because we work very closely with governments to help them with open banking initiatives. So we've been keeping a close eye at what's been happening, and even this snapshot has already evolved a little bit. So we're seeing primarily the dark blues where open banking has already been implemented, and where it's in process and where it's under consideration. And though it may seem like it's not as populated as we like it to be color-wise, it has definitely moved on. So for those naysayers, and I will definitely be taking advantage of this opportunity to speak to say it, is that I remember some time ago when I started at the OBIE, and when I established Open Vector, people were saying, well, you know what, this is just a fad. It's just a fashion statement. Open banking will disappear. It will never last. Well, surprise, here you go. Open banking is going nowhere. Open banking has already evolved now to open finance, and I will explain a little bit of that now. Sorry about that. When we talk about open banking, again, I mentioned that this is primarily in the financial sector as being the first phase of open. In the likes of the United Kingdom, in Australia, and other countries, it's been primarily in the banking sector, in the financial sector. And as we look at Mexico, for example, they've implemented an open finance fintech law, of which Open Vector was part of in 2018. And there, in the case of Mexico, they have 20 subsectors as part of their open banking initiative. So if we look at the UK, we only attacked one sector. Mexico is attacking 20 sectors, and that means that they are going to be establishing, or they have established, regulations and data standards to allow for 20 subsectors to be able to start taking advantage of an open finance mechanism. That means that it's not only the banks, but we're looking at now other financial institutions. In the likes of Mexico, it's 2,265 and counting institutions of different sizes and different backgrounds that will be participating in the fintech law. So as you can see, the market is definitely larger, and the opportunity for cross sharing of information is enormous. So Mexico has certainly set the pace in what an open finance opportunity could be. Now, Brazil announced this week, or last week, excuse me, as everyone must be aware, Brazil has announced that they are starting on the open banking path. And what they've done is, again, as I mentioned earlier, is watching other countries really take off and leverage what we've done in the UK. They have put together a set of regulations and aspects of open banking that are truly incredible. The way they are organized, the way their working groups will be done, the way that the central bank will be driving to a certain extent, but then allowing some flexibility for market-driven initiatives is truly remarkable. And I think definitely Brazil has done a great job with their first initiative. Colombia has also announced their open banking intentions. The superintendency there has begun to establish the first um, um, templates of what open banking will look like. So we're very excited to see the likes of Colombia taking that foothold. As we look at Canada, Canada a couple of months ago also mentioned that they will be going ahead with open banking after a white paper was sent out last year, of which the financial sector contributed to say whether they wanted open banking or not, and they came to the conclusion that they needed open banking. The difference with Canada is that Canada wishes to have a more market-driven approach, where the regulator may not be so upfront and in a driving on the driving seat like the likes of Brazil or the United Kingdom. So very interesting to see how Canada evolves from an open banking perspective. The United States has started talking about or is under consideration the likes of open banking, but I've written a paper about this that you can find online where I mentioned what are some of the challenges that the United States will have in reference to open banking. And the problem with the United States is that it unfortunately is very divided. And I mean, not divided because they are against each other or negative against, it's just because of the 50 states and 50 plus states, the way each one of them has their own government, their own structures. And even though they follow common rules, I have to remind everyone that there are 13 different regulatory bodies related to monetary or financial institution structures in the United States. The other problem that the US has had is just distance. So if we look at government in Washington, D.C., we look at the financial sector being primarily in New York and Chicago, and then having most of the big fintechs or the main fintech structures in California, and even some in Atlanta and or the Tampa Bay area. It makes it very difficult for the United States to be able to work together on an initiative like this. So it's almost like the US will have to take on open banking state by state by state. And the problem with that is, and this is a fear that I have, and I'll probably talk about that in my wrap up, is the opportunity of open banking as version 1, as I call it, is to ensure that we set the standards and the pillars of the common aspects of what is required for open banking, so that as we move on to version 2 and 3, we can then, when we look at open finance and then eventually open data. Now with open data, what that means is that we will have the common key structures across an entire region, allowing for the exchange of data in a seamless way or in a cross-border fashion that will be done so much more efficient than we know today. So anywhere from Chile all the way to Canada, if you have an open data structure where key structures are in place, for example, common data standards as one important aspect. If we maintain that common data standard aspect with, of course, the flavor of each company, of each country having their own data standards to be able to reach their own market, having a common data standard as a whole, the key structure of the data standard, will play a very important role in open data. If we don't have those common standards, what will happen is that it'll make it very difficult for the likes of a country to speak to another country when their data sets are so different. Then we're going to need, again, some kind of an interpretation structure that will be able to consume the information and change it into something else. And it's just not the most efficient way of working. So my concern about the US is that if it is so fragmented by state, that there may be some states that may decide to go a bit rogue and start developing their own structures, or even the United States as a whole. There were some early conversations that they wanted to create their own standard, and I find that to be a big mistake. So as we move further then east, we look at Australia and New Zealand. Now, of course, Australia, through various delays in being able to implement open banking, showing how challenging it is to open banking, they have finally been able to launch their open banking structures, and very pleased to have seen that taking off. The likes, of course, of New Zealand is already very much ahead in their conversations around an open banking structure. And I think it's just a question of time before we see them dark blue. The same thing for the likes of Singapore. And that's a very interesting conversation when we look at Singapore, because Singapore is a very, very special market. In Singapore, they are doing quite some different aspects of open banking, where it's not regulated, and it's not driven by the regulator whatsoever. It's much more market driven. And they have also shown a different structure of open banking, which I call personally closed banking. And that is where a financial institution provides open banking like services, but only to its customers. So if a financial institution provides APIs and marketplaces and whatnot to only its business customers, allowing them to interlink with each other and then creating products and services only for their own clients, I don't think that really is open banking. I would argue, and I've had that argument quite strongly with some folks at Singapore, I still consider that to be closed banking, but nevertheless, Singapore has definitely shown another way of doing, and again, it's all welcome to see how things evolved. Of course, we have, again, the likes of South Korea that have done an amazing job in open banking. They have been doing, I think, what we're calling open banking. They've been doing open APIs for quite a long time, before we even came up with the concept of open banking. The problem that they've had, and this is, I know this firsthand because I've had a chance to meet the governor of Seoul in a visit that he had to London, where we had a private meeting, and he mentioned that the biggest difficulty that they're having is that because it's lacking regulation, South Korea is unable to really push the market forward and to really create the products and services they were hoping for. So it's, again, another way for us to see the difference between a regulated market and a non-regulated market. And the problems with a non-regulated market is that we have to hope that the players within that market will understand the power of sharing data and to drive forward the initiative to the benefit of the consumer and not for the benefit of their own agenda, the benefit of their own journeys, as you will, for their own financial institutions. So I think this is a big problem in non-regulated. On the other hand, you also don't want to be over-regulated. You want to make sure that there is a level of freedom for the market to be able to make key decisions. And as I mentioned earlier, the one benefit about a non-regulated market is that it allows for the market to drive faster, because they will be able to then drive the collaboration and establish the rules and move them faster than the regulator may be able to in certain jurisdictions. So I think this is a real big opportunity if it's done correctly. On the other hand, for the regulated markets, I also have a lot of, I see a lot of benefits on that, because it keeps everyone on the same schedule. It keeps everyone focused, because the regulator is driving the initiative and it's focusing everyone to what they need to do. So I think, again, it's very important to distinguish the two, because there is a bit of a difference. And both of them have opportunities, but we also, the likes of a South Korea or even a Singapore, there is a small issue with non-regulated markets when the markets are not working for the best interest of the consumers. And I'm sure that will draw up some arguments about that, but I think the facts are facts, and that is what we're seeing. So let's move on here onto the next slide. Now, this is something that's been a conversation around the open banking world for quite a long time, and that is the conversation of the GAFAs. The GAFAs being the Google, Apple, Facebook, and Amazon. And of course, we have others now with Microsoft and Alibaba and other big techs that are coming into play. It's been a wait and see game as to when the big techs would finally start to move into open banking. And if everyone has been following the news, we're starting to see that more and more and more. And this is just the latest one. I was going to draw up a multi-slide of different opportunities around big techs, but I thought that wouldn't be the best use of our time, and more just to speak about this. So what does this mean? It basically talks about how the big techs are finally realizing the opportunity that open banking brings, but it's primarily about one key thing, and this is something that I didn't say, I didn't invent. It's about data being the next oil from its worth, right? So big techs understand the value of data more than anyone, and I think they're starting now to commercialize that opportunity. So if we look at the likes of, and here I quoted Bill Gates when he said, something very scary couple of years ago, actually, I think about over 5 years ago, he said, we need banking and not banks. And I think that probably put down the first, or threw the first stone at the banks to make them understand that that the big techs could look at ways to evolve in such a way that they would need the banking processes or the payment processes as a whole, but not necessarily the banks. And this is, I think, a big, big problem. Now, I want to be very clear and upfront that I come from a banking background. I started my career in banks, so I don't have anything against banks. As a matter of fact, the reason why I am so, I'm going to call it upfront or violent against, or when I speak very strongly to banks about open banking, is because I don't want to see them disappear as we know them. And I think that the problem here is that if banks do not realize what is happening with innovation, and if they don't move fast enough, we may see banks disappear as we know them. And some of the facts, that I mentioned are the fact that millennials that will never set foot or may never set foot in a bank, in a branch. It's just a very strong likelihood that we will never see our children's children ever set foot in a financial institution. Why? Because more and more products and services are on demand, either being offered by a bank directly or offered by third-party providers more and more. So I think there's a huge risk in the livelihood of banks if they don't realize the opportunity. So what are some of the things that are challenging banks? It's basically traditional banking. It's the way that banks think. It's the fact that many banks consider that they must maintain their traditional ways of thinking and structures, and this is a big issue because it will prevent them from moving forward. When I talk to financial institutions that are very much open banking minded and all of that, it primarily falls into one category, and it's primarily their innovation department. Innovation departments used to be this small office that was located in a floor that nobody knew, with a bunch of crazy guys locked up in a room that nobody wanted to let out, because who knows what they were thinking. And that's the past. Today, innovation departments are becoming so key because they truly are driving exactly that, innovation, and understand the threat and the opportunity as well of what innovation will bring. The problem we have is that while innovation departments are fantastic, they're not always being listened to in the way that they should. And here's my next point, which is cultural change. In order for a financial institution to truly, truly become open banking, if we look at these large institutions, they must undergo a cultural change. They must understand that a bank will have to change as they know it. They will have to look at ways of changing their business, changing their mindset, changing their strategies in order to be able to truly take advantage of open banking as they know it, especially as we move on into open finance and open data, where now you have multi-sectors coming into the open strategy of sharing information and sharing data. This is going to become an even bigger problem for financial institutions if they don't adopt and adapt these different changes. So I think a big cultural change is required for them to be able to truly take advantage of open banking. And as we move into the other phases of open. So for banks, the big issue here is that they see open banking as a challenge, as a risk, because they are only seeing it from the aspect of having to share their data. They don't understand that they also can consume that information. So I always have a question for banks, and I say, well, you've had consumer data for hundreds of years in some of these large institutions that have been around for a long time. And my question always is, what have you done with it? What have you done with this data that you've had and you've housed for so many years? And now that there is an entire revolution around consumer data and the opportunity of consumer data, you want to say no and protect it and do nothing with it. And I think that this is a big mistake. I think banks need to realize that they also can play an amazing role and really be at the front of the consumer if they only understood that if they open up to that collaboration with fintechs to help them evolve and create products and services, they will. So And again, banks, and I'm sure that I'll have financial institutions argue that they are becoming open banking and they are doing this and they are doing that. And I would say, yes, there are financial institutions that are doing some things. There's a couple of really good examples of banks that have taken a lead in open banking, even from day one. And I'm not going to name any because I'm not sponsoring anyone or anything like that. There are institutions that have, but having said that, I also feel that they are not moving as fast as they should, and that they could definitely be creating and allowing and providing consumers with much more than they're doing. And I think it boils down again to the inability to do that because of traditional banking, because they are safeguarding their investors and they're safeguarding what they do today and concerned about rocking the boat. And unfortunately, what it's doing, and I think it's a great thing, what it's doing is it's opening the doors for challenger banks and even digital banks to come in and really take a stronghold of their market. And some of the ways that the big banks are trying to break with that inability is by creating, spinning off digital banks or something else that they can do then to keep the traditional bank on one side and then spin a digital bank on the other. Not sure if how that will work in the long run, but we'll have to wait and see. So going back to the big tech, this move from Facebook to create Facebook shops is only, again, another movement into what the big techs are seeing as great opportunities to start to really get involved here and take some of that share off of the banks. And again, I'm not sponsoring Facebook or anyone. There are other examples of this happening across the board. But basically what is happening is that with the likes of a Facebook, where they have access to Instagram and WhatsApp as part of their Facebook product, they're able to then have institutions or companies of any size being able to offer their services and be able to gain that consumer via either WhatsApp or Instagram, and even offer payment services from within. Now, I know that WhatsApp is also heavily moving towards a payment platform of their own to be able to start to do that kind of work. So if you can imagine that, if I'm texting with you or we're on WhatsApp and we're talking about a book that you read, and as soon as that book, you mentioned the book, WhatsApp has the technology to capture the book. It tells me that I can purchase it in 3 different places. It tells me what account I can go get it from. And it tells me what account I have money to be able to do it from. And would I like to press this button and go ahead and pay for it? And would I like to pay for it in 1 payment, in 3 payments, or use my debit card, for example? And if you look at that and you're going, no, that's just around the corner. Those kind of opportunities, those kinds of flexibilities are around the corner. So if you look at that example I just gave about being able to purchase a book while we are on WhatsApp, chatting with each other, I never talked about a bank at all. It's basically, me as a user having provided WhatsApp with consent ahead of time to be able to do these kinds of things, so that as soon as I mention a product, WhatsApp goes out, it gives me the product, finds where it is, it goes into my accounts, it tells me where I have funds, it tells me how, which one is the most, even using AI. I mean, we haven't talked about AI in open banking, but the mix of AI and open banking becomes a very, very powerful conversation. Having AI involved now in open banking means that with AI, they can turn around and say, Mr. Figueredo, we looked at your account and you want to buy this book. We don't think it's a good idea that you use it out of your primary savings account because, based on the way that you spend your money, it just doesn't seem right because you're going to be left without any funds based on your habits. So what we think you should do is so AI could come in and really provide a consumer with additional financial services to be able to make key decisions very quickly. So the power of all of this technology and all of this data, if it is harnessed by the big techs in combination with small fintechs, would allow for us to be so have the ability to be able to purchase products and access services so quickly without really needing a bank. So a bank would just become literally the place that holds our funds and is under just under the normal treasury regulations and whatnot to be able to hold our funds and interact and release funds, etc., or in the background to work corporate to corporate, other features. But for the retail space, I think there is a huge threat. Now, having said that, there are already some movements into open banking and open finance into the corporate space, that where corporates are starting to question how they can participate and how can they can start taking advantage of some of the opportunities of open banking. So I think, again, we may see some services that start becoming more corporate or B2C, and that could make it very, very interesting as we move forward. So I hope that makes, that has made sense for everyone, and that gives a bit of a snapshot of what we're talking about not only the big techs, but also the challenge for banks, the challenge that we're seeing with financial institutions. And I truly, truly hope that in the near future, banks will stop to think that way. I'm not going to mention the country, but I was part of one of my Lord Mayor visits. I was in a country in South America, and I sat down. This was in 2018. I sat down with the board, a couple of the board members of a very established traditional bank in this country, and we had our meeting, and the Lord Mayor spoke, and then it was my turn to speak about open banking. And literally, my conversation lasted no more than 5 minutes. The bank literally, they heard what I had to say, and they stopped me, and they said, "You don't need to go any further. We will never do open banking because it's just will never happen." And they pretty much had a smile on their face, saying, "You can forget it. We're never going to do it." Now, fast forward to 2 years later, and I received a call from that same bank asking me if we could have a conference call around this subject called open banking, because they wanted to start to look at how they can start participating. So innovation, and this is something I've been saying for a long time, innovation will come with or without us. With or without the banks, innovation is coming, is here, and will continue to go in that direction. So everyone must wake up to that opportunity. So I think enough said, because I think it's one of my sandboxes my soapboxes, where I just stand up on that and just go on for hours on that. So I will go ahead and move forward. So it brings me to COVID-19. Now, like I said earlier, when I first started, I hope everyone is safe at home and that all your loved ones have not been affected, and that your lives have been disrupted as least as possible by this. But it is definitely a fact of what's happening today with COVID-19. It's very unfortunate. But let's just take it from a different perspective, if you'll allow me. COVID-19 has also shown us not only how fragile we are, again, as a race, as I mentioned here, but also how dependent we are on technology. With COVID-19, there was a race in different, and I'm sure that in most countries where it's available, to be able to get food delivery, for example, because people were not able to go out, not able to get services. You had to rely on technology to access your account, to check your statuses, to look at all these different aspects, but also to work. We are now become so dependent on Zoom, for example, and other meeting products like this, because this is what we're forced to do. So more than ever, technology has shown how much it is needed, and if we would have been better prepared, I think that we have also would have been able to provide better services. And I think personally that COVID-19 has shown the importance of open banking and open finance more than ever. I think it truly has shown that if we would have been better prepared with an open banking structure, and we would have had, of course, open banking in full collaboration, we may have already had more products and services, or even better, more efficient products and services than we have today. So taking away the immediate needs of finances and access to medication or hospitals, or just basic information around what is happening and where. Another really important aspect is, for many people, it affected all of us, is how do we access grants and loans and other financial aspects, that we need. And I think that this is where quite a number of financial institutions came together to create quickly apps to help consumers. It happened here in the UK, where a couple of small fintechs got together and provided apps to be able to provide consumers with quick access into knowing where certain information, how to have access to information was hugely important. And again, I wish we would have had a lot of these things earlier and not waited for something like this. But COVID-19 is a wake-up call for us to realize the importance. And I think that this has made, I know that there are, and I can't name them for contractual purposes, but there are some key countries that have suddenly kicked into high gear with open banking because they've realized that they now have to move, and we are actively trying to help them with this as quickly as we possibly can. But on the lighter side, we have all now been asked to stay indoors, even though now we're starting to relax some of those rules. But at the beginning, we're locked up for weeks on end, and we took it. We had to go to find that entertainment in the likes of a Netflix or an Amazon or all those other streaming sites, and it's just incredible to see how the capacity or the availability of these internet sites suffered just because of them being able to cope with the sudden demand of services. So again, it's COVID-19 is definitely, at some point when we're able to look back, we will definitely be able to have a lot of lessons learned of things that we've got out of this, not only from a technology perspective, but also just from a human perspective of how we all behaved and continue to behave in these times. So let's look at just for fun facts, as I talked about the likes of access to views, but just a fun fact here, and these numbers are in the millions. If we look at the access of how people have suddenly turned to the likes of a Netflix or Prime Video or BBC News or ITV, they were showing record numbers suddenly because of how that occurred. So anyway, just a fun fact there on just some of those numbers. So if we look at the financial challenges of what this will mean now for open banking, and what COVID-19 has taught us, is again the need for people to understand where to gain access, financial opportunities in the sense of grants and whatnot. And I think this is where we could have played a bigger role, where we need to learn quickly from these opportunities and need to find a way to create these products and services so that if we are ever caught in a situation like this, God forbid, that we have the ability to be able to provide consumers with these facts. So I think the financial challenges that COVID-19 has prompted us has definitely demonstrated the need for services like this, much more efficient services. I was accessing my bank, which is again a very large institution, and I was surprised by the lack of information, the inability to be able to serve me as quickly as I needed to. And I think it's just because nobody was ready. It's not because that particular bank was inefficient. I think it's because we never saw this coming. And again, in hindsight, we hope that this is definitely a lesson learned. So these are some of the things that I see that of how having an open finance may have influenced or could have made our lives better during the COVID-19. So here we go with the first one I had mentioned earlier: single access into apps providing individuals a snapshot of their finances. So this is basically being able to have a very good account aggregation model that would have quickly given us single access to all of our accounts and allowed us to be able to very quickly move and or realize how our accounts would be affected from day to day, from month to month, by having this access to all of our services under a single window. And it also could be where the financial institutions may have used that, and if we had AI in place, we could have maybe even had models presented to us to say, well, based now on your lack of income, this is how you will be affected. This is where you're going to have negative numbers, and this is what you can do. This is what's on offer for you. So I think this is, again, I had mentioned the finance opportunity for that happened because of COVID-19 and how we could have gotten around that. Open insurance. Now, I sit on the Open Insurance Board, and this is something else that is very interesting because we would have been able to, again, have all of this information around insurance and being able to very quickly realize budgets. What do we have access to in the cases of our loved ones potentially being in hospitals or passing away because of this horrible pandemic? It would have been able to for us to see not only our own insurances today, but look at other insurances. How do they tie into our finances? And be able to have done something to budget better or to access more information about them. Do we qualify? Do we not qualify? So I think in the likes of insurance, and primarily around health and life insurance, it would have been very beneficial to be able to see. So instead of me having to log into my health insurance to see what they have available, what is my current situation, going back to seeing, well, how much is it that I pay, and when will that payment come up? Does my insurance offer me any kind of a hold, meaning that they will hold my payment for a couple of months, or maybe they don't? So I think this is again where we could have had an opportunity to share information across different sectors to be able to do that. And that's when I go into the next part about cross sectors. And again, here's where we could have had lending and payment deferments coming in across for consumers and businesses. And this is where, again, having that ability to have open banking and open finance, being able to understand your consumer day-to-day, your financial planning, and for businesses, we could have potentially leveraged loans dynamically through open finance instead of a business having to scramble to find that information or to go to their single bank. If a business could share their information as part of an open finance platform, then you could have a business that is actually being accessed by finance providers or loan providers or grants, and go directly to them because they would know their information. That means they would be pre-qualified already. So, or already qualified, not even pre-qualified, already qualified for these loans, so that it made it much easier, much faster for businesses and for consumers to access this information. So just to give you an example of what I mean by being qualified, and I used this example in the past. If you can imagine that you use open finance and open banking to the likes of a couple that are just married and that are looking to purchase their first home. They go on to a third-party provider that offers the service. They provide them consent. The third-party provider gathers all of their financial information, goes to their banks, looks at all of their credit cards, and already working with another third-party provider, gives them already a rating based on true factual data and information. Comes back to them and says, basically, you would be able to have a loan, a mortgage for approximately whatever number, £500,000. And what we can do is we'll send you all the information you need to already be qualified, not pre-qualified, qualified. So the third-party provider takes on the role of qualifying that consumer, that couple, and it could even be a bank that does that, or a third a financial institution other than their own that participates in that role, so that the couple would already be fully qualified for that mortgage. So one day they're looking through the real estate ads, and they see a property that they really like. They go to the house, they go visit the house, they do a tour, they really like it, it looks fantastic to them. They go on to their app that has all of their information. The house would have, let's just say, a QR code available. They would press onto the QR code. The house would then be acknowledged by the app, and their app would be able to tell them exactly what their monthly payment would be, and whether they qualify for it or not. If they qualify for it, because they're already qualified, they would just go ahead and say buy, and they would buy the house instantly, right there and then. No need for paperwork, no need of anything. So think about the efficiency in the financial institutions, the mortgage loan, the mortgage companies, the loan firms, lawyers, anybody that needs to be involved. You wouldn't have to wait now for 1, 2, 3, 4 months for all of this process to happen. This efficiency would have already been done ahead of time if we would have mechanisms of open finance to allow for this kind of opportunity. Now, that's just one example. So going back to our COVID-19 situation, if these things would have already been done, if a business would already have been vetted efficiently by a third party or even by multiple financial institutions, then a business that finds themselves suddenly in this situation can access that app and say, yes, find me a loan and I need this much. And they wouldn't have to go through the loan process. They would already be qualified for that loan, and they would have access to those funds immediately. The same as a consumer. I've given in the past many examples of what it would take, of how we could benefit from overdraft fees, for example, or actually reducing or eliminating overdraft fees if we were able to have an open banking, open finance structure that allowed for consumers to work with third-party providers to give them access to third-party loans in order to cover a sudden overdraft issue, preventing the fees of a bank instead by granting a lower fee through a third-party provider for that gap loan in the case of a sudden overdraft. I mean, these are really simple things that we could have potentially mitigated if we had these opportunities in advance. But again, looking at hindsight, I hope this is a lesson learned. And lastly, when I look at that last point about just wait time, in order to speak to an agent, and this is true, I waited for over an hour just to speak to my bank agent just because they were unable to get to me quick enough because of everything that was happening. So again, having an open finance structure, open banking structure would have alleviated all of that, because I would have had, for the most part, everything that I needed or may have needed done through third-party providers or even through my own financial institution, had they entered or implemented an open banking, open finance structure ahead of time. Now, of course, nobody could have seen what was coming, and I'm not saying that this is the bank's fault. By no means. I'm giving an example of how we could have had potentially better products and services, and how in the future, I hope that we benefit from these things, so that if we ever, and again, God forbid, we have to go through another structure like this, or another pandemic like this, that at least we have the products and services to be able to give us a better outcome, or a better day to day. So, again, in summary, as I try to wrap up a little bit of everything I said, innovation will come, is here, it will continue with or without us. And it's only going to be moving, again, further and faster. And that's just because of how many more fintechs, how many more, the need of the consumer is increasing on a day-to-day. And this is a curious, piece of just trivial or quiz, if you will. Somebody was going through a presentation, and I found it very interesting to read, that they were saying how the can, the tin can was invented, and it took over 25 years. I think it was either 25 or 50 years. I think it was 25 years. It took 25 years before the can opener was invented. So if you think about that, we invented the can, and it took us 25 years to invent the can opener. And what that presentation this gentleman did was brilliant. He showed how long it took between the time of something being invented until the next phase of that, to better that product, how long it took. And the gaps were sometimes enormous. And we laughed at that because we looked at that and we went, oh my God, I can't believe that. But actually, these are true, these are history. But if we look at, so as he started to approach into the 1900s, well into the 1900s, especially as we started to speed up after the 1950s, 60s, 70s, the gaps started to become much, much, much more quicker, or less. The gaps were much, much less. If we look at just the cell phone, for example, the innovation around cell phones, I think Nokia showed that during only a couple of years, it had created something like 13 different phones in just a matter of a year or two. So I think, we look at innovation, and it's only going to come faster, and it's only going to come further. And that's simply because we as consumers demand it. And this is, again, another fun fact is, I waited for many years to be able to buy what we call a big TV, right? And so I finally found a TV, and it just happened to be at the time the biggest TV that you could possibly get. And it's like going, wow, so here it is. And not too long ago, I saw a box downstairs in the complex where I live, a box with a TV that had been purchased. It's already bigger than mine. And you just laugh because you just go, you know what, it will never stop. We will always want more as consumers. We want it more, and we want it quick, and we want it now. So that's again, and it goes back to into the second bullet point, which is basically what open banking, open finance is trying to do. And with open data, we're aiming at efficiency. So we're looking at removing the corporate-driven dependencies more and more. We're looking at, again, looking at the times back when I remember, because I started banking a long time ago. I remember at banks, you having said how we are Bank ABC, 350 branches strong. And that used to mean something. That used to be very important for a bank to have hundreds of branches. And I think those times are long gone. So definitely we're removing ourselves from corporate-driven dependencies, and we're moving a lot more into product-based efficiency, which is a very different thing. And lastly, again, talking about looking at COVID-19 and looking at other things that have happened to us, I think that I hope truly that we are a lot more aware of innovation and how this has a very big effect on people. And we have to remember that the likes of COVID-19 have had a huge impact on people, not only of people that are banked, like I said earlier, but also people that just simply are regular, everyday, non-bank, consumers out there, people out there that needed information and had nowhere to go to really access that information, or even small businesses that were desperate to know how they were going to move or act, or how their financials were going to work. So I think, I really hope that the likes of this unfortunate event has taught us those lessons. But trying to finish on a high, and not leaving this on a low note. I really truly hope that that financial institutions as a whole, governments and consumers, and I know fintechs will continue on this journey of looking at open banking as a positive thing, not looking at it as a burden or just a regulatory checkbox, which it's not. Open banking is truly about an opportunity for financial institutions of all shapes and sizes to be able to truly take advantage of what we have and where we're going. So I'm looking forward to being, as I am, and as many of you are, we're all part of this journey that we're facing today. And I'm certainly looking forward to the next couple of years of how all this will come to be, and how things will look for us as consumers down the road. So, I've left you my information. I look forward to being able to contribute with all of you, to exchange ideas with you. I think, I've said some challenging things, and things that, people may or not be agreeing with, and that's a good thing. I truly hope that that debate is strong and it continues on. And again, I'd like to thank all of you for having me here and listening to me. And I hope that this information has been useful to all. So again, thank you to the organizers for this segment.